Now begin with the next session. Before that, there's the keys that we have found. If anybody's, just check your pockets if you have misplaced your keys. All right, now before we move on to the next session, generally what happens is during lunch, the rice starts kicking in. Yeah. And then you feel very sleepy and you're yawning. And I don't want that to happen because, we have a fantastic lineup of speakers. So this is what we're going to do. Can you give me the mic? I just want a hand mic, please. Thank you. Check. Can you just put this mic on? Wonderful. So let's get you all going and rocking. Okay? Yes? Yes? Mr. Pai said Mumbai is going to be the next big thing. So the energy has to be like double, triple, yeah? Okay, so what I want you to do is I'm going to segregate this into two teams, okay? So the one here, this side, you have to say la 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 la. What do you say? And you see, entrepreneurs are very innovative. They are hatke. So आपको la 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 बोलना है, लेकिन हटके बोलना है. So you have to do la 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 la. Come on. Yes. So just show me how you're going to do the la 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 la. Okay? Let's do it together. And if the person is on the phone, I will make you do belly dance. So just keep it aside. I'm very capable of doing that. Okay. So just show me what you're doing, okay? 3, 2, 1. Okay, superb. Now y'all have to do this. Put your hands out like this and say, aha. Come on, do it with thoda andaz. Say, aha. Yeah, that's more like it. So when I do, my hands are here, you have to do la 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 la. And you have to do aha. Okay, so let's do this together with a lot of energy, okay? 3, 2, 1. Aha is better. Come on, you can do better. Okay, let's do this. Final round. I want to see who's going to win. Is the La team or the Aha team going to win? Okay, 3, 2, 1. Last time. Oh my God, both were equal, yeah. Superb. Give yourself a round of applause. Okay, with that, ladies and gentlemen, we move on to our next segment. That is building scale from 5x to 500x. So for any entrepreneurial activity to translate into economic growth, the focus needs to shift from start and small to scale. It's both a much loved and much feared word. Because only once this word starts translating into reality, will there be generation of jobs, growth, money, and wealth. So how are we seeing scale over the next decade? What happens to the companies that are valued between $100 million to $1 billion? How can they ensure super fast scaling up? Let's start talking the moolah real quick and start the session. For this, I'd like to invite on stage our session chair, Sandeep Singhal, the co-founder of Nexus Venture Partners, Mr. Kapil, Bharati, co-founder and CTO of Delhivery, Mr. Prashanth, Ranganathan, the CEO of Paysense, and Dr. Sanjay, Parikh, co-founder of Indegene. Over to you, Sandeep.
Thank you. It's always, I think she's done a great job in getting you guys going because I was worried that I'll have people snoring in the audience. So it's great. Good to see everyone. And, you guys have heard great stories. I guess all of you who were here yesterday morning heard Mr. Deepak Parikh talk about the ultimate scale-up, right? Where he's taken a company that he started in the 1970s and is now the leading market cap in financial services. We have a few examples here. Delivery has started, it started in 2011, is now the largest e-commerce delivery company, but as Kapil will talk, has done a lot more. Prashanth will talk about how he has taken his understanding from global markets, moved back to India, started a fintech company, just exited, sold his business to Naspers, so he'll take you through the entire journey. And Sanjay has been, working on Indegene since 2000 and has bootstrapped the business into becoming the largest, service provider and solution provider in the pharma space. Very different journeys that all three of them have taken to scale their businesses. And I thought it would be great for you to hear how there is no one way to scale a company. People find different paths in scaling businesses. You heard Mr. Deepak Parikh talk about going IPO in the first year. None of them are IPO yet, but the idea is, as you hear them, you will get a sense of what your journey might be, and each of them will obviously share their insights as how things have worked. In terms of the panel itself, what we'll do is I'll give everybody a chance to talk about their journeys. We'll have a short discussion amongst ourselves, and then I'll open up to the audience and give you enough time to ask questions. So we'll try and do it 15 minutes, 15 minutes, and 15 minutes. So that's sort of a quick synopsis of the session. With that, I would ask Kapil, maybe if you can start talking about delivery, logistics, the industry. Where have you done, the last decade, and what do you see happening in the next decade?
Sure. Good afternoon, everyone. About delivery, so the idea of delivery is to be, as we look at it, is to be an operating system for commerce. We operate in India, which is one of the very complex countries when it comes to logistics. And logistics in India itself is a huge opportunity. It's a $200 billion market. And interestingly, if I think about the other players, or the largest player within India, within this industry, would be around maybe $200 million. So that's the kind of opportunities there for some player to come and be one of the leaders in this industry. So there are two things that we do, typically. One is we build large-scale infrastructure, and the second is we invest a lot in technology and the data sciences side of things. When I say large-scale infrastructure, we have the state-of-the-art hubs, sortation centers, automation centers, something that we have built across the entire country. In a way, we might also be one of the largest real estate companies based out of India right now. On the technology data science side of things, just to give you a perspective, we so far would have delivered around 500 million shipments in the last 10 years. That is pretty much every household in the country. I'm guessing each one of you would have delivered, we might have delivered to each one of you over here. And every day we would be delivering maybe 1 in 4 customers get a shipment from us, just to give you a size of the scale that we operate in. Given that, the amount of data that we collect, the amount of things that have to be happening in the background, that's where technology and data plays a very, very critical role, right? To talk a little bit about our journey, how we started and where we are. We started the e-commerce parcel delivery way back in 2011. That's when the e-commerce was coming up in India. That was a great opportunity for us to come in, disrupt, and look at how we can be part of the whole system to shape up the e-commerce in the country. Very soon we started pivoting into some other verticals. One was warehousing, which we started early in 2012, 2013. And then started looking at what are other avenues from a supply chain point of view, how we can come in and start knitting different online versus offline different channels and start moving in that direction. So for the early years, we spent a lot of time working with some of the, pretty much all the e-commerce companies, integrating with them tightly, building our infrastructure, building a network across the entire country. More recently, in the last couple of years, we started looking at the offline segment, which is the enterprises. What are some of the challenges the enterprises face when it comes to the supply chain? How would they move their goods from the manufacturing units to the warehouses? How should we stock the inventory in the warehouses? How can we give a simple view of the entire inventory sitting across all the different warehouses? How best we can move them together? And that's been one of some of the key focus areas for us in the last couple of years. In terms of different services that we offer, we definitely work with e-commerce, pretty much all of you know. On the freight side, we work both on part truckload, full truckload. We do cross-border. And we are also looking at how do we expand into some of the neighboring countries. We already have presence in Bangladesh, Sri Lanka. The idea is how we can extend our technology stack outside of the country and start partnering with the local players, start getting their assets, digitize them, and start putting them on a platform, and then start stitching them together so we can deliver end-to-end products and services over there. So that's, in a high level, broadly speaking, what we do and where we are.
And Kapil, how many employees?
So if I think about the entire partner network, the partner ecosystem, people who work with us, one thing I didn't mention, we are a very asset-light company. The way we have built up everything, if I think about some of the incumbents, people who have built certain logistics company in the past, they would start picking up physical assets and start aggregating them. We believe in picking up digital assets, how we can convert, how somebody who maybe a delivery boy who has a bike, who has a phone, maybe there's a fleet vendor who has vans or the trucks, how we can take their assets, digitize them, and put them on a platform. So the number of partners we work with would be around, I don't know, 40 to 50,000 different partners who work with us. People who work directly with us would be around maybe 25 to 35,000, just to give you some perspective.
So we talked about employment generation. So in the last 10 years, 35,000 jobs have been created by delivery. Great. Prashanth, maybe you can talk a little bit about the fintech industry and what you have seen. It's one of the hottest areas right now, and you've gone through the whole journey and gotten an exit. So,
yeah. So I'll start off by saying that startups are actually a culmination of all of life's experiences, right? One's life experiences. So I grew up in the Indian defense family. So every couple of years, my father would move, and we would move with it. So I picked up a lot of languages along the way. But I think alongside, what I also picked up is the ability to just thrive in any random new environment and kind of just be constantly okay with change. So we moved out, when my dad retired, we moved from here to Australia. I did my high schooling in Australia, then I moved to the US for college, worked in the US for many years, built a couple of startups, exited them. Then as a part of one of those exits, I actually moved to Singapore, and I started working for PayPal. So I ran product for Asia Pacific for PayPal. It was only when I was at PayPal, I was actually here looking at various companies in India. In fact, I had no intention of being in India at that time. I was just looking at companies in India to acquire, right? So we came and we looked at FreeCharge, Citrus, MobiQuick, looked at making an investment in Paytm. And something magical about India that I kind of fell in love with, which was there was just so much happening in the e-commerce, e-tail space, and I just saw that the payments world was still quite lagging. And just like you said, it's a culmination of experiences. So I had this, I had these deep experiences at PayPal, and I was completely comfortable moving back to India to build a startup here. So that's what actually brought me here. In fact, it was a very casual conversation between some folks at Nexus and myself, and I was like, look, I'm thinking about this. I may do this. I'm kind of a bit bored. I have two options: head back to the US or do India. And they were like, look, if you're interested in India, we'll write you a check, right? And so that gave me the confidence to say, well, okay, there's something real here. And if this is the time where I can probably convince my wife to move to India and not to the US, so I took that plunge. And sure enough, the only observation in the market, I didn't do any deep research or anything, the only observation in the market was that e-tail was growing, digital economies were getting created, Indian identities were becoming digital. There was this mass proliferation of mobile devices, and data was becoming very cheap. Just those were enough ingredients to give me the confidence that if you built something in payments or fintech, you could actually do something very meaningful. In fact, the very first kind of product that we wanted to build in the market was a buy now, pay later product. We said, why is it so complicated to check out online? We should just have a simple, you buy now, decouple purchase from payment, and check out and pay later, right? So that's what we came to build. Very quickly, I assembled a team. I moved to India. I assembled a team both in Singapore and India. I had 5 founding members in the team. A year later, we found ourselves not in the buy now, pay later business, but actually partnered with India Infoline, and actually doing personal loans, right? So we had completely pivoted. And given that the space and the opportunity in credit was so large that pivot was quite seamless. It didn't feel like it was a major change at all. And the folks on the cap table were very kind of comfortable with that change because it was still a very large opportunity. And so we went through that process, built up a team here, built a lot of the intelligence that was required to kind of connect the demand side of the business and the supply in terms of capital, and that's the journey we've been on. What we did very early on, or what we recognized very early on as a board, was that this business would take a lot of capital over time. So it was best to align ourselves with someone who had deep strategic interests and deep pockets very early on. So the exit may have been in December of 2020, but I'd been working on this exit since 2017. So when we brought Naspers on the cap table, or PayU on the cap table, it was all for I think a measly $1 million. The thinking was already there that we would work with them and we would build and co-create alongside so that we would exit in 2020. So while many folks in the room perhaps get a lot of advice on P&L budgeting, I think it's very important to also do cap table budgeting, right? You need to know very early on how your cap table is going to look, X years down the road. And as an entrepreneur, I think it's your responsibility to drive towards that and hence drive shareholder value and exit. So that's the journey we've been on. As a part of this transaction now, we've combined all the credit assets that PayU had in the country with Paysense. So we bring the intelligence as well as some of the deep lending expertise. There's a lot of buy now, pay later expertise in Lazy Pay inside of PayU that gets combined. So in some ways, it's a dream come true for me, right? Where I started and perhaps pivoted out of to kind of make sure that I was fundable and kind of building a business that was of value to the venture community, eventually was able to kind of connect the dots back and acquire the BNPL business out of PayU. So that's where we are, and I think the next 10 years are going to be phenomenal because now I can deliver credit for that 200 rupee Swiggy transaction all the way to that 20 lakh rupee personal loan, and that's the beauty of this journey. It's a short 4.5 years, and I say short because I think when I'd come in, I had geared up for like a 9-10 year run, but yeah, it seems like there are.
Well, like you said, it's just starting, so
the
next 5 years is still there. Sanjay, you've been the longest on your entrepreneurial journey, since 2000. I'd love to hear sort of how you guys have thought about building the business. You bootstrapped it, export orientation, so please.
Sure, thanks so much. Yeah, I feel like Indegene in that sense is different from Delhivery as well as Paysense, because we got started in a different era. We were founded back in 2000 at a time when capital wasn't this available. It was just, we started off with a startup capital of only about $300,000, which we ran through pretty fast. And it wasn't as if, follow-on funding was so easy to do. But I think we passed that. We bootstrapped, as Sandeep pointed out. And over the last decade, our focus has not been so much on, just growing valuation, but it's repeatably driving growth, driving profitability. We've been profitable for the last 10 years, substantially profitable and stuff like that. So we look at the journey as we sit here today as more, not 5 to 500, but more 100 to $1 billion moving forward. And we're really excited about being able to do that because of the sector we operate in and the capabilities that we have. The other difference that Indegene has vis-a-vis the
Sanjay,
two
maybe
other
you can
businesses that we're talking
maybe talk about Indegene itself. What do you do?
About myself?
No, what does Indegene do?
I will.
Yeah.
Right, so just one other difference is really Indegene, unlike the two other companies that we're talking about, is 100% focused on international and global markets. So all our revenues come from the US, Western Europe, China, Japan, etc. Actually, virtually no business comes from India itself. So what do we do and what is the context in which we operate? And we've been focused only on one sector, and that is the healthcare and life sciences sector. Within that also life sciences. And there I define life sciences as pharma, biotechs, and medical devices companies. So the healthcare industry as a whole worldwide is more than $8 trillion. The life sciences industry alone is more than $1 trillion. So in itself, it's a large opportunity, touches every one of us. But this industry is undergoing significant transformation, significant churn, disruption, what have you. And it's several different factors. You've heard about cost of healthcare, we talk about compliance, we talk about the demographics of healthcare, and more importantly also the consumer habits, how physicians as well as patients are actually consuming information as well as making decisions. So in that context, all our clients, life sciences industry as a whole, is being forced to reimagine how they bring products to market. And when I say bring products to market, I'm talking about the entire journey from lab all the way to the end patient. And at one level, the problems that Indegene is trying to solve is two large problems. One, how do we accelerate and drive more probability of success in the clinical research area of pharma? Even now, if you look at it, annually, I think if you want to bring a product to market in the global sense, really an innovative product, the whole clinical research continuum itself is going to cost you in excess of $2 billion, 8 to 10 years of clinical research. This has to change, right? And we are at the heart of that transformation. We are enabling our companies to drive faster clinical trials as well as increase their probability of success. And the way we are able to do that is our ability to mine real-world evidence. And when I say real-world evidence, what I'm talking about is electronic medical records, patient claims, et cetera. There's a significant amount of insight that one can derive from there in order to drive more effectiveness as well as efficiency in clinical trials. So our hope is that we will be able to drive at least a 50% reduction in clinical trial costs over the next 5 to 10 years, and then also be able to reduce the timeline by at least another 30 to 40%. And everyone signed on, whether it's the regulator, life sciences industry, the healthcare environment in general. And the other big problem that we're trying to solve is at the front end, or you can say downstream. Essentially, pharma companies, even now, if you look at the global pharma industry, the amount they spend on sales and marketing is absurd. It's about 25% of their top line, right? And most of it is still spent on sales reps in the field. We are basically today well on our journey to drive omni-channel customer experiences with our ability to kind of manage content, data, multi-channel operations itself, to basically reduce that sales and marketing expense to 10% or less. And so really, to some extent, what do? We are standing up for large pharmaceutical companies, shared services, excellence centers to drive marketing operations, as well as to do real-world data analytics and research. The culmination of that now, more recently, is clients in the United States saying, we'd like you guys to take full commercial responsibility for our products. Take the product, here's the baseline. If you drive incremental revenues above this, take 30, 40 cents on the dollar. And that is something that we've been able to demonstrate very successfully over the last 2 to 3 years. Big pharma as well as small biotechs essentially are saying, you have the full infrastructure to bring a product through regulatory approval, through sales, marketing, medical affairs, take it and gain share from that. So that's really what Indegene does. We've gone through a journey. We started out 100% revenue coming from the Indian market. That was back in 2004, 2005, when we actually had to negotiate credit terms with the chaiwala. And I'm not kidding. To the point where then capital started becoming available, but again, we've kind of kept it as tight as possible, driven profitability, and we are really excited about the journey moving forward because in all of these services, we've made significant investments in technology so that we're not just a body business. We want to non-linearize scale vis-a-vis headcount.
There are two themes that sort of are coming out from your discussions about scaling. One is, as you just mentioned, the use of technology in your businesses, right? 3 very different businesses, but you've all used technology to scale. I'd like to go a little deeper into that and sort of maybe you can talk about what was the one thing in technology that you think really made a difference in the way your business scaled. Like, so for example, SLAs across, supply base, which is completely, disaggregated in the delivery case, right? Or Prashanth, in your case, data usage to sort of build out your models. So maybe that's one area. The second that you talked about is this use of capital, how to think about capital. You talked about budgeting your cap table. That's a very interesting way of looking at it. How do you think about, you raised money from SoftBank recently. How did you think about bringing a large financial investor in your cap table? Maybe you can talk a little bit about that, and anyone can start.
Okay, I'll start first. On how technology has played a critical role, right? Some of the things that Prashanth was mentioning. In the last decade or so, if I think about it, there were three fundamental changes if I see. One, as we were mentioning earlier, that the data storage costs had really gone down. It's very, very cheap to store data onto disks, etc. The compute capacity is much, much easier to access thanks to all the cloud systems that are available right now. Thanks to these two things, we are able to do a lot of complex decisions based on data in a real-time basis. And that's where you see a lot of analytics, AI, ML, all those things coming in. And when I look at these three things and start applying to different industries, and particularly in logistics, we see that when shipments are coming in, when goods are coming in, how do I start looking at capture all the information across the entire network that is spread across the country? What are data points I capture? How do I consolidate those data points? And how do I make real-time decisions? Now, simple thing, for example, again, in the past when people have set up logistics companies, they would do their planning, their annual planning or their monthly planning, maybe once a month and keep on fixing things every month or every quarter. How many trucks do I need? How do I set up a network? Where should I set up my facilities? In our case, we are able to do those things in a much, much real-time basis. As a sense, my network is a lot more dynamic based on how many shipments I picked up. What should be the size of the trucks that should be moving between my two hubs? At what frequency should they be moving? How should I be loading the goods over there? All the decisions can be done in a real-time basis. I think those are some of the fundamental things which have changed and which have really, really helped us a lot. And help us push to the next level. The other thing is on the digitization of the different participants in the network. I think if you have to scale, it's very difficult for us now to go ahead and start investing in a lot of physical assets. That's not something that we want to do. I think a lot of capacity available across the country, across different countries. There are people who already have trucks, people who already have facilities, people who already have the ability to go and deliver shipments. That is, how do I get all of them together? How do I make their assets available, searchable, discoverable on a platform? And how can I give them a uniform platform where I can track them and keep on figuring out what's happening across the entire thing? So those are some of the things which has helped us scale a lot in the last couple of years. Should I answer the next question right now?
Okay. Any other points on technology?
Yeah, so I think I would just add to that. I think everything you've said, Kapil, is absolutely spot on. The only thing I would add is around scale, right? Without technology, you just cannot get to the scale, or the non-linear scale that we just spoke about earlier. So today, to give you an example, as a combined entity between, for PayU Finance completely, we see some 12 million requests for credit per day, right? And that is humongous. And if you think that you're going to be able to deliver that any financial institution without core technology, then I think that's a bit of a pipe dream. So we deliver some 12 million kind of responses in real time. And some of our merchants require us to respond in 23 milliseconds, right? Which means we have co-located alongside. These are some very, very large Indian merchants. And so we've co-located with them to be able to deliver a response, a credit decision in 23 milliseconds. So that's what technology can make possible. The other technology innovation that carried Paysense all the way through is as we look at new to credit, right? So today, at the heart of every decision we make is a massive graph, right? So Facebook has an interest graph, Google has an intent graph, we have a trust graph. And that trust graph connects devices, IP addresses, people, financial statements, bureaus, etc. And so at any point, when a person who is traditionally known as new to credit or thin file, as in there's not much credit history to them, comes to us, they actually are not thin file. They're not new to credit because we already know so much about them based on the network they keep. So back in the day, the small microfinance institutions used to have like trust circles, and they would only lend into trust circles. We've just done that with now 550 million nodes connected a few billion times, right? And so that graph can decision in real time and is far more accurate than any discrete model that can predict on a particular person. It's a bit of a head fake, right? Everyone thought we were a fintech lender and we were partnered with just like everybody else, but we're actually an intelligence company. So we built software intelligence or credit intelligence for the economy. So where the bureaus and where the traditional financial institutions came short, we had a significant leg up, right? And to be honest, that is what was ultimately acquirable in the market.
Great. Sanjay?
So yeah, again, I'm not the technology brains of the company, thankfully, but I can tell you how we've kind of leveraged technology. And in pharma, a lot of what pharma does really is take information that you've collected through the course of your clinical trials, you repurpose it to submit it to the regulator, to submit it to doctors, to patients, and even to the payer. So there's a huge amount of expense, and that entire content supply chain at various levels within large pharma is siloed, as well as very manually driven over the years. What we have been able to do is really use best-of-breed third-party platforms for natural language processing, and really been able to deconstruct content into what we call modular content, and then reassemble it automatically. So that content now doesn't become such a bugbear, which is really costing so much, and takes months and months to get approved because there's a compliance overhang, but instead of which modularize it and create algorithms in order to auto-assemble or auto-author the content. And on the other side, you've heard about the data challenge. I talked about real-world data. You're talking about millions and millions of patient records. And these patient records are complex documents, unstructured text as well. Given that we have medical expertise, and really cutting-edge medical expertise, clinical experts within the company, we've had to actually even build up bleeding-edge technology capabilities, partnering with the likes of Google and Amazon and Microsoft and stuff like that, to be able to mine that data intelligently and deliver clinical insights, because that's what's going to cause clinical trials to become more efficient and more successful. So that's how we've used technology in the recent past.
So I think what you heard is that although he's a logistics provider, he's a fintech provider, and he's a content / clinical trial provider, they're fundamentally technology companies that are masquerading as the other players, right? So that's one thing I would say, that if you think about scale going forward, any of you that are building businesses, think about how you would take technology as your basis around which you would create your service. The service provisioning is one layer that resides on top of technology. And I think today in any business, you brought up storage, data, and so on. I think data has become the basis on which decisions are being taken, and on the basis of which, to your case, large organizations are, designing their new business models. Let's talk a little bit about the capital raising. You have started with 300,000, and that time the rupee was, I think, 30, right? So that was like, what, a crore at that time, right? How have you thought about building your business, with internal accruals and so on, versus raising large amounts of capital and so on?
So even though, the first few years sound like they were the most challenging, at that level, you had little to lose and everything to gain. So obviously, back in 2000, we raised that first round in 2000, and then in 2001, 9/11 happened, and then pretty much capital just vaporized. So, we were forced to think about what we wanted to do, and all of us were hungry enough to say, no, we're going to dig in. We think we have a compelling business proposition. At that point of time, we bootstrapped in whatever way, form, fashion. We discovered revenue streams in the Indian market, and we brought it to a level of profitability. We came to a point where we had a choice to make. And the issue was, we had a brand name CEO of a pharma company in India who was basically saying, I'm willing to invest in you guys, but essentially it was clear that he was going to dictate the agenda. Now, if we had taken a 3-year view on that business, that would have been the choice to make, because we would have gotten valuation, brand name, easy to sell to investors. But we were convinced that there was more value to be unlocked. And so we stood that out. We did a management buyout of the the VC at that time, because that was actually constraining us from growing, because they were not able to invest anything new. And we then kind of, while we were bootstrapping, we then found one family office which was willing to invest in us. And they were in it for the long term. They shared the vision, they were aligned to what we wanted to do. We realized that what we were doing in India was equally applicable in international markets, and they've been with us even to date, and are willing to kind of follow on even now if there is a suitable opportunity. Over time, through internal accruals mainly, we have done 7 acquisitions, some of them for capabilities or a solution itself, a technology solution. None of them have been just to bulk up revenues, right? And so we are acquisitive, and at the same time, we've managed that cap structure extremely tight. That cap structure hasn't changed now in 14, 15 years.
Prashanth, you talked about strategic investor coming in to your cap table.
Yeah, so I think I'll make 2 points, one on the strategic investor, but before that, I think most companies do get started with venture capital. Venture capital is like taking on nitrous fuel. So once you take on nitrous fuel, you don't get to pad the brakes and you don't get to like fix your steering, right? So once you take on nitrous, you just gotta go down the fairway as fast as you can. And while burn is the wrong word, it is actually what venture capital forces you to do, right? Don't take on venture capital and then drive slow, right? Do it with bootstrap capital if that's what it takes. The second part is when you take on any amount of capital, it's actually very expensive, right? Any capital is expensive capital. So you gotta very clearly identify what are my spends and what are my investments. And your spend to investment ratio should always be very much in the investment zone, right? So I'm actually not a big believer in taking on venture capital and doing cashbacks because those are spends. I'm a huge believer in taking on venture capital and figuring out product features or technology investments or customer experiences. Those are investments because let me give you a lending example, right? The way we look at our returns on loans, there are loans that pay back, and then there are learnings. There are no losses, because if there were losses, that means that's a spend, right? But every rupee that goes out and comes back or doesn't come back teaches us something, right? And in fact, it teaches us in a multiplicative way because we use this graph methodology, right? So for me, when you take on venture capital, you have to be extremely prudent. That's an investment. Every dollar or every rupee spent is actually an investment spend rather than a kind of a spend for anything else.
Great point. Kapil? Yeah.
So when we started, we did bootstrap. That's how we started off for the first 6 to 7 months. I think in the initial days, the idea about raising money was to see how, it's more about survival, just to be honest over there. You know, whatever we're doing, the model works. We understand the unit economics. And if we continue to scale, we should be able to be one of the largest in the country. So that's how when we started off, that's the reason why we raised the initial amount of capital. But as we have grown, especially in the last couple of years, the reason to raise capital was more around how do we expand the network. As I mentioned earlier, there are 2 areas where we focus on. One is building large infrastructure. The second is technology. Those are the 2 areas where we invest very deeply. Building a huge real estate network of high-class infrastructure across the country needs a lot of capital. We need that so that we can connect the entire country, so we can be in 70,000 pin codes. The second is the technology. How can we continue investing in technology, building a stack so we can expand into different geographies? Keeping those 2 things in mind is where we have been raising a lot of investment in the last couple of years. The profile of investors also change. The initial profile of investors are more who help us take a lot more risk, who help us figure out how the business model is supposed to evolve. As we continue to grow, the next set of investors start looking at how do we grow beyond what we have been looking at? How can we grow in a multiples of 10x, 20x beyond what we have been thinking of? I think that's the kind of pull that we have been looking at least for the more recent investors. And also the idea like how do we now, they're also helping us shape up how do we think about going public? When do we go public? Those are some of the discussions, and there's a reason why we have some of the names on the cap table as we have right now.
Great. You know what I'll do now is we're reaching sort of a 10-minute point. I'm 5 minutes behind. So maybe we'll just open this up for questions from the audience. I don't know if there are mics that are going around. If not, but at least stand up and just state your name before you start. Yeah, go ahead.
I have a question for Kapil. How you are optimizing your last mile delivery through technology? Like what all procedure or methods you are using?
It's we can spend a day or so, maybe more. So, so when we started off, and I'll give you some examples. When we started off, typical productivity of a person who's delivering shipment, one person would take around maybe, would deliver around 25 to 27 shipments a day. And we look at the entire cost structure. We said, if last mile is the area where we spend a lot of money, and to make my person a lot more productive, how can I deliver more shipments in the same amount of time? That's the first problem we started to look at. To fundamentally do that, we said our bikers right now travel a distance of 100 kilometers. They carry around 65 kgs on their back. How do I cut that down? How can I make sure that they are much, much closer to the end customers where they're delivering? And how do I reduce the number of the load on the back? Can it take 2 trips or 3 trips instead of 1 trip? That's how we redesigned our overall network. We call it a dense mesh network versus a hub and spoke network, which typically logistics company do. So we typically would be, any end customer, we would be around 5 or maybe 7 or 10 kilometers away from them. So we cut down the amount of distance the person has to drive. And that's how we started optimizing the logistics. Now, if you talk to my data sciences team and you talk to other people, you will have, the traveling salesman problem, optimization, route, and all those things start coming in the background. But the net in net, the objective over there is how do I increase the productivity? How do I bring the cost down? And how can I change other parts in the network in addition to just improving on just the routing scheme? All those things play a role over there. Yeah.
Great. Next. I can't see the light, so just whoever's got the mic, yeah.
Hi, my name is Prasad. Question to Kapil. Since you have built such a big organization, so many people working, what is your view on the building culture? How do you build such a large team and still continue to grow? What is the thing that you have made sure that there is a culture in team?
It's an interesting question because we are spread across the country, in maybe 2,500 cities. I think one of the things that binds all of us together is, the vision to be the operating system for commerce. And how do we break it down and talk to people across the entire organization? That's one thing that, is a message that we make sure we keep on talking to our people about. The other one, there's certain things that we internally, do. For example, when you meet people on the ground or people on the who are delivering shipments for us or who are in the facilities, how do we talk to them and how do we give them specific things where they know, hey, this is the goal or the objective I'm trying to reach. For example, on-time delivery, whatever it means. How do I make sure that my SLAs, my TATs, and I'm doing everything so that I can deliver shipments on time? If I'm working on my hub, if I'm delivering at the last mile, what is that one thing that guides everybody and make sure everybody is glued to it? I think those are some of the things that have worked well for us. Yep.
Next.
Hi, this question is for Kapil. Kapil, hi, this is Anurag. My name is Anurag. Okay, as I think so you have expanded to the international market, right? So what are the challenges you're facing right now in terms of international? How do you see e-commerce as in growing international market when logistics can play, a imperative role on it?
Sure. So the question more around the challenges we face in the international market, right? So when we think about expansion, we're just not thinking about e-commerce anymore. E-commerce definitely is one area where, of course, we are known as a parcel delivery company, and that's one of the largest business lines that we have. But we look at the end-to-end supply chain, be it the warehousing side of things and the entire transportation network on top of it. So as we grow into different geographies, we don't have the capability, the operational capability, the hands-on deck or the boots on the feet over there. So the way we expand, we want to go and partner with people who understand that geography, who have a presence over there. And our, the way we differentiate from others is the tech stack that we have structured, and that has evolved. Now, how do we work with a local partner in that geography, and so that we can enable them on a tech stack, and then just use the tech stack to deliver the shipments, or move the goods, or stock the goods. So that's the approach that we are taking. Yep.
Sure.
I'm going to ask a question for Sanjay for a minute. Acquisition as a means for growth. is an interesting topic. How do you guys look at acquisitions, and how do you integrate those companies post that acquisition? Because these are all entrepreneurs that are all building their own businesses. I think it'll be useful for people to understand.
Okay, so as I mentioned, up until now, all the acquisitions that we did were specifically to buy either an asset. So for instance, we did a couple of technology acquisitions because we wanted to get some multi-channel engagement platforms on, and then we built on top of that, created a complete product to take on some of the challenges in the industry. In other cases, it was more for a specific capability. So for instance, as we were getting into this whole electronic medical records kind of thing, we basically acquired a company in Atlanta which had focus only in real-world data and evidence. And like that, all the acquisitions that we've done have been for capabilities. And you're right, most of them are founder-driven, right? And I think at the time of evaluating the acquisition, there's a constant deal flow, right? And you look at each one of them, you learn something, etc. But while evaluating it, the boxes that we have checked, number one is strategically, what does it do for our business? Is it additive, or is it just going to be one more thing that's going to founder? If it's not kind of folding into that, being a product commercialization partner for the next generation, then it's out. The second thing is, almost all the acquisitions we have done have not been through iBankers. They have been direct conversations with the company itself. We've seen several, but at the end of the day, it is the chemistry between us and the founders. And almost in all of them, with the exception maybe of one, the founders are still integrated within the company. And the way we've done that is, it's their business to run it. It is still their business to run, and we've made them an integral part of the integration process. We create an integration office within Indegene, and then they work closely with them because there are several different stakeholders who need to be brought together. Every company event, every company, they immediately get onto the managing committee of the company. They are part of every monthly call. They are looking at the revenues, profits of every other division, and they are understanding also how they can leverage other businesses in order to grow them. And in several cases, because they are founder driven and we are extremely prudent in the way we do our acquisitions, there's often an earn-out element because we don't want the founders to leave. So during that earn-out, the whole idea is really giving them as much opportunity to earn as much, right? So Indegene does make investments, even though it may be something that may enhance their valuation, but we think it's worth it rather than being penny wise and pound foolish.
Maybe one more question from the audience, and then we'll bring this to a close. Yeah, this side. We haven't had a chance.
Hi, my question is for Sanjay, sir. So, referring back to the use case of reducing the life cycle of clinical trials, for us, the biggest challenge remains getting access to healthcare data, and it's also that being unstructured, it's very difficult for us to test the use cases, train and test our models. So what are your thoughts on helping startups get access to good data banks?
If I could answer that, I'd be $1 trillion. But really, the thing is, of course, in developed markets, which is where bulk of the innovator clinical trials are actually getting done, the access to real-world data, your electronic medical records, claims, and even genomic, proteomic data, or subgroups of data actually is becoming a lot more easy to get. There are third-party data providers, and given that most of the companies that we are working with are large pharma, pharma has so much money that they will buy every data source under the sun. Unfortunately, once you move away from the developed markets, access to data and the quality of data is pretty lousy, right? If you look at India, for instance, we have much more fundamental problems. So we don't even have a culture of actually getting electronic medical records together. Your data is something that you need to keep. To your question, how do startups get access to data? It depends on what you want to do. If you are basically saying, I want to look at the data and create products of my own, etc., then it becomes something where you need to raise capital or get access to capital to buy those third-party data sources. And those data sources are available. They will sell it to everybody. On the other hand, if you're looking at being more of a solutions or services provider, most client companies will provide you access to the data. And lastly, you create a network of accountable care organizations, hospital networks, etc., who are willing to de-identify the data and make it available to you. Then you put in place the infrastructure, technology, as well as people to kind of mine it and deliver analytics-ready data sets.
Got it. Great. Thank you very much for sharing your insights and for the panel. Thank you.
Thank you so much, gentlemen. I request Sanjay from 100X to please step forward and felicitate our dignitaries with a token of appreciation. Ladies and gentlemen, post this, we are going to have the lucky draw where you can win the Eco Dot. So if you have registered yourself for the lucky draw, make sure you have your lucky draw coupon with you. You've registered? Fantastic.
Oh, with the bag.